Hello, Money Magnet. It's good to see you. I hope you're having a great weekend. Are you having a good weekend? Yeah, nice and relaxing. Hope you're safe. Hope everyone's safe. Hope everyone's healthy. But we gotta talk about this stock market. Right now, you guys are looking at a 15-minute chart. Right, just scroll over to the left. The action has not been too good. Been some up and down moves, not much direction as you can see. It also reflects on the daily chart. Just not much direction. I'll make this a little smaller. You can see it's coming off of an uptrend. We've been on a really good uptrend since late June, and so far we've been very bullish, hitting new all-time highs, but we've been low in volatility, range bound, not much direction, especially the intraday trading. We had a couple of days where it was just terrible, and then a couple of days where it was okay. It wasn't amazing, but it was okay. But times like these, it makes me want to zoom out even more. So when that happens, and I have to tell you guys, we have ourselves a doji candle right beside a couple of candles with decent bodies, directional candles to the upside. However, last week was a doji. What does that tell me? It tells me that the market was chopping. No clear direction, range bound, but we have a range. Based on the weekly chart, we have almost a $10 range. It's a $9 range from 617.87 up to 626.87. $9 range, and based on the weekly chart, based on this doji, that is the chop range. Because how do we trade dojis? You watch the chop range. You watch the range of the doji. The idea is that if we can break the high of the doji, which is at 626.87, the idea is that more upside can be had. We bet to the upside. And if we break the low of the doji, which is all the way down at 617.87, we would be very bearish to the downside. And based on the weekly candle, it would probably be a multi-week move to the downside. But the thing is though, that's not actually what I want to talk to you about. What I really want to talk to you about is what comes after the doji candle and what we can expect this week. I know a lot of people, especially day traders like Uncle Jarvis, are not quite happy with type of price action we've been getting lately. Unless you're a high level trader and you've been doing this for a while, you may have had some difficulties making some money intraday, especially with the SPY. And I know that's upsetting and frustrating, but I have some good news. The good news is that when you look at the weekly chart, these doji candles do not come often. As a matter of fact, they're kind of rare. So we had a doji last week, but when did we have a doji candle before that? This doji candle right here was on May 5th. We had another doji candle right here on March 17th. Couple of months apart there. So they don't come often. They come, it's the past few, it looks like they come once every 2 months, but they don't come often. So for those that are frustrated with the market right now, I have some good news for you. The price action that we had last week is actually rare. So if you're not happy with the price action we had last week, there is a very, very, very high chance that this coming week, we are not going to get that same low volatility price action. As a matter of fact, when we look at the last couple of dojis, like this one was May 5th, it led to volatility. Look at the candle that came after that. The low was 577, the high was 594.5. That's a little over a $17 range there. That's pretty volatile. And what was the other doji that we had? We had it back on March 17th. Look at the candle that came in after that doji weekly candle. The low was at 555, the high was 576.4. That's a really big range there, guys. So for this week, Uncle Charles is expecting some good range, some good volatility this week. So if you're not happy with last week, I do not expect this week, based on the context of the weekly chart, I do not expect another choppy week. And I'll tell you, it could go either way. It could be bullish if we can break the new all-time high. That's the thing. For this chart to continue to look bullish, bulls need to continue to break records and send us to new all-time highs. How long or how much longer are they going to keep this up? In my opinion, and I could be wrong, in my opinion, the path of least resistance is a correction to the downside. That's what it looks like to me. But as always, Uncle is a sheep style trader. That means I follow the price action. I may have my opinion, and my opinion is that it should head to the downside. Not because I'm bearish or I'm trying to impose my will, but it just looks would look a lot healthier if it does. That's the only reason. I'm a price action guy. I'm a chart guy. I like healthy charts to chart. And it doesn't look healthy. The path of least resistance looks more to the downside. But at the end of the day, this is ran by the market makers and they are very manipulative. They're gonna do what they're gonna do. So since we are sheeps and we follow the price action, we have to identify the levels. Now, like I said, I'm not expecting another chop week. Those chop weeks, those doji candles on the weekly are rare. So let's prepare for a very great week. Expect it this week. Okay, let's expect it and let's prepare. Now, looking at this daily chart, we can see that SPY managed to close above my 623 fib level and it managed to stay above the 5 DMA, which is also around that 623-ish level. But not once from July 9th, but twice, right around that same area, 624.5 to the 625 zone. Right around that same area, we had selling pressure. So we know where the sell zone is. Stay above 623, clear 625 and 626.3. But keep in mind, the all-time pivot high is all the way at 626.87. So you can use that pivot level instead. Either way, to get to new all-time highs, staying above 623 and clearing 625 is step number one. Step number two, break the new high to send us to new all-time high, which is 628 and 629.5 plus. So the bull case is pretty straightforward and simple. But if it is pullback time, we need more than just a gap down just for a bounce intraday. We need breakdowns of support and support levels turning into resistance. We need the price action behavior to turn bearish. Right now, that's not the case. So step number one for bears is break down 623 and turn that level to resistance. Break down 621, 619.5 in the fib level at 618. I'd be bear biased below 618. So those are the levels that I have. Watch for the setups and trade it unbiasedly. It's going to be more impactful this week. I'm not expecting a choppy week. If it does, may God help us all. But hopefully it doesn't. Because like I said, let's go back to the weekly chart one more time. That's the monthly. There's that doji. But when you stroll to the left, dojis do not come often. They come once in a while. And after the doji comes a volatile week. So guys, I gave you guys the levels. Let's trade it unbiasedly. And now we look at triple Q. Same approach to triple Q. If we go to a weekly chart, we see that it also has the doji. And just like SPY, the doji is rare on triple Q on the weekly chart. It does come once in a while, but it's rare. So we go back to the daily chart. Let's watch the pivot levels. We know there's selling pressure at the 555.5 area. We know there's also there was a false breakout setup there. We cleared that level on July 9th. We broke it back below on July 10th, and we retested that area as a sell zone successfully on July 11th. That's bearish price action. The question is, can the bears continue it and show follow through this week? To do that, they'll need to break down 553, 551, 549.5, and I do have a fib level at 548. Break down those support levels, I would be bearish. Below 549.5, I would be bear biased actually, and I'll favor a correction to the downside, maybe another $15 to $20 move. But if this is not bearish, that 555.5 level, you guys see that it's been bearish behavior off that pivot level. So if this is not bearish, I need to see that level recaptured, broken through, at least a daily chart close above it. Above 555.5 would put 557 in play, which is around the previous pivot high. Multiple candles around that area and we face selling pressure. Never officially closed above that level. So step one is to clear 555.5 for the bulls. Step two, clear 557 and 559 and we can head to new all-time highs. But the main level to keep in mind is 555.5. Think of it as the equilibrium level. Below it, we can expect more downside, and above it, the bear's price action gets invalidated and there is a higher chance that we can bounce to new all-time highs. Now we move on to Tesla. We had a false breakdown setup off of Tesla when we recaptured that 309.3 level last Thursday, and last Friday there was a small gap down in the morning, but they managed to recapture it intraday, which kept the daily chart recapture intact. Targets that I have above right now is of course the 200 daily moving average. It's around 315.5. It could change by tomorrow morning. Just keep in mind where it's at. But right now it's at 315.5, and I do have the 50 DMA at 319, and then a critical fib level, the next critical fib level at 320.5. For me to truly favor a bottom is in those moving average along with that fib level at 320.5, all must recap, and then I would favor more upside and trust the strength of the bounce. But if this is just a dead cat bounce or the bounce is over, price action behavior must reflect that. Breaking down 313, 311, and that fib level at 309.3 would tell me to switch back to bearish and favor more downside. If those levels fail, I would definitely look for puts. And back to the downside, 308, 304, 300 or lower would all be back in play. There is a gap around that 297-ish area, and of course a lot more gaps below that, but we'll take it one level, one setup at a time. Here is NVDA, once again closing at new all-time highs. This company is breaking records. $4 trillion company now. Holy moly, donut shop. And last Friday they managed to clear the next fib level, which was at 164.38. There you can see that wick though. They went to a pivot high of 167.89, setting records, but there was a good amount of selling pressure. I could be wrong, but when I look at something like that, when we're at new all-time highs and all the good news that was coming in about it being a $4 trillion company, I can't help but to think that there are people right now catching FOMO and entering around this area. When I see that wick, to me, that could be a sign of profit taken. If my hunch is correct, 164.3, 163, 161.5, and 160, those levels must break down as support. Should send us another $10 to $15 move to the downside, maybe a little more. But if I'm wrong and NVDA stays above 164.3 and clears the next level at 166, guess what? I'm not gonna argue with the price action and stick to my opinion. I'm gonna adapt and I'm gonna listen to the price action, because if 164.3 holds as support and 166 clears next, I would expect more upside back to 168 and 170 plus. Those levels would be in play. Here is Coin. Now I've been talking about dojis on the weekly chart though, but Coin has a doji on the daily chart. Gotta be very careful. Big body green candle followed by a doji. One of two things can happen, but one thing will surely happen. I'll say the thing that will surely happen. Based on the context of these two candles, a big move should come tomorrow. We can expect another big body candle similar to the action we had last Thursday. What I'm not sure is if it's going to be to the upside or to the downside. So if you're a trader of Coin, tomorrow or Tuesday would definitely be the day to trade and catch a big move. Expect a big move. I, your Uncle Charters, humbly admit that I don't know if it's going to go up or down, but what I can tell you is the levels and setups to watch out for, so that even though the YouTuber can't tell you where it's going, the price action will be able to tell you where it's going and you'll be able to react to it. So it closed around 387 last Friday, which happens to be one of my support levels. Below that, I have 385, 383.5, and a critical fib level at 382. If you want to be bearish, you want to see those pivot levels fail, loss of 382 would be a big bearish warning, because it was a recent pivot high in late June. Loss of that level will put 380 and 378.3 in play. Now 378.3 is even more important than 382. Here is why. Because it's the low of the doji. If you're trading an evening star pattern, or even any doji candle really, you want to remember, you watch the range of that doji. We take out the low, that should lead to a big trend move to the downside. So if we lose 382 and lose 378.3, that's a big massive bearish warning sign from the price action, and we can expect $5, $10, maybe $20 move to the downside. But if we are not bearish, then once again, resistant levels must continue to clear. I have a resistant level at 389, 390.5, 392, 393.3, and 395. Well, 395.5. If we can take out those resistant levels, I would be bullish and favor more upside. The main critical levels to watch that'll make me more confident in being bullish is the high of the doji, which is at 395.5. We take out that pivot high, I'm bullish, and I'm favoring we break 400 plus on Coin. And last but certainly not least, here is IWM. When I look at the daily chart candles, it definitely look a bit bearish to me. I could be wrong, but it looks bearish to me with the loss of that 223 level. And we went down and hit the next fib level around 221.5. Looking at the weekly chart, we can see the big body green candle from the week of June 30th, and last week we had the doji. This could be setting up for an evening star or a bullish continuation into next week. Now let's head back to the daily chart so we can look at the context here. We lost 223. That's a false breakout setup, and it led to a level move down to 221.5. If that's all the market makers are going to give us, then and they want to switch back to bullish, then 223 must recapture to invalidate the false breakout, give us the false breakdown, recapture 223. That will put 225 and 227 more likely to hit back in play. But if this false breakout setup continues to hold and stays intact, stays in play, you want to see price stay below the 223 level. Bearish follow through would be to break down the next support level at 221.5, and I also have one at 220. If those levels break down, it's like the lowest I'd say is the 15-minute time frame. But if those levels break down, we can expect more downside down to 218, 216, and there's a good chance we go and hit 214, all based on fib levels, guys. So remember, know the levels, know the setups, and trade it unbiasedly in real time. That is the sheep style way. And the Uncle Chartist way is also to remember that you are a money magnet. What does it feel like? What does it taste like? Operate from that consciousness. You are a money magnet. And what would a money magnet do? Well, they'd follow the price action. Bye!